Thank you for attending this webinar, Bookkeeping Best Practices. I am your moderator, Jenny Alton, from the New York Small Business Development Central Office. Also helping to run today's webinar is Renee Goodnow from the Central Office as well. Today's presenter is Ramona Cedeno, CPA and founder of FiBrick, an innovative tax and accounting firm in New York City. This webinar is brought to you by the Pace University Small Business Development Center and the New York State Society of CPAs. The Pace SBDC is part of the New York Small Business Development Center network of 22 campus-based centers and outreach offices, which are located across New York State, along with the central office in Albany. The NYSBDC is a U.S. Small Business Administration resource partner. Our free advising, education, and advocacy services are made possible by funding from the SBA, New York State, and our host campuses. So you know, this session is being recorded. We will share it with attendees along with the slides a few hours after the presentation. Attendees are muted and will not be on camera. If you have any questions during the presentation, please don't hesitate to type them in the questions box as they come up. Ramona will take pauses throughout the presentation to answer questions. If you submit a question, we will not mention your last name or business name. For very specific questions that may take more time and detail to answer, or if we run out of time to answer all questions, someone will follow up with you after the webinar. Joining us to lead things off is Andrew Flam, Director of the Pace SBDC. Andrew, I will turn things over to you.
Thanks so much, Jenny, and Renee behind the scenes as well. Good morning, everybody. My name is Andrew Flam. As Jenny mentioned, I'm the Regional Director of the Pace University Small Business Development Center, and delighted to be joined by one of my colleagues here at the Pace SBDC, Greg Callender, one of our team of terrific business advisors. And we'll be introducing our keynote speaker today, Ramona Cedeno, in just a moment. As Jenny mentioned, I guess our center is one of 22 centers located throughout the state. Our focus is on providing focused one-on-one business advisory services from our team of really talented business advisors, helping you with a wide range of issue areas, whether it's access to finance, formalizing some of your financial methodologies and operations as a kind of key topic of today, looking at marketing strategies such as building your website or improving your social media presence. Thinking about kind of procurement opportunities and various certifications that may be relevant for you. And then, clearly over these past quite nearly 3 years now, kind of looking at pandemic recovery strategies and the various grant and other programs that might be in place to help you, recover and kind of get yourself back, throughout these very challenging times. So, if one or more of these issue areas are of note to you and you think maybe you benefit from talking to an advisor, I will put our email address in the chat so you can contact us and be able to kind of arrange a session with Greg and or one of our other colleagues here. Or if you're joining us from elsewhere in New York State, we'll be able to connect you with one of our sister centers located elsewhere where you can make sure you can connect with the business advisor that's in your community. We also do, and this is kind of a good example of the kinds of training programs that our center and our sister centers throughout the state offer on a daily basis, being able to look really in depth at particular topics that really help you, whether you're an existing business owner or being an aspiring entrepreneur looking to launch a venture, be able to operate and grow your business in New York State. So we work with a wide range of issue area experts, such as Ms. Cedeno is going to be presenting today, and really, collaborate with a wide range of external organizations to help make sure that, the programming that we're offering really meets the needs of New York State small businesses. And as Jenny had mentioned, I guess we're really delighted, to be able to have worked with Ramona as well as her colleague Rick Kravitz through the New York State Society of CPAs and helping bring this session together, as well as a number of others that we've done so far. So this is really kind of an important partnership, and I think a really, really valuable program for you, the small business owner. So we will put in the chat a link where you can provide or learn more information about other sessions that we're offering in the weeks to come, as well as those from our other centers throughout the state. So, I'll add that in a moment. And then finally, what I want to make sure is, I guess I mentioned quickly, kind of reference to various recovery programs, from the pandemic. There are still kind of a handful of grant and other low interest loan programs that are in place, both through the public as well as the private sector. And to be able to make sure that you're updated and informed about what's available, I'll put a link in the chat that has a roster of kind of live programs you can kind of learn more about. And obviously, again, kind of connect with a business advisor to learn about what might be relevant for you and your business. So that's kind of briefly who we are and what we do. Again, appreciate you taking the time to join us today. And without further ado, I wanted to introduce Ramona Cedeno, the CPA, and she is the founder and CEO of a small business called FiBrick. That is a dynamic and terrific business. And also, I guess, in terms of her community connections, we're also very pleased that Ramona has joined and is part of the New York State Small Business Development Center Network Advisory Board, as well as a board member of the NYS Society of CPAs, amongst her other various things she does in the few hours that she's not, not busy kind of running her own very successful business. So with that, Ramona, again, really appreciate you leading the session for us, and I'll turn things over to you. Thanks again.
Yes, thank you, Andrew, and thanks, Greg, Jenny, and welcome on Renee. Thank you so much, and to the Society of CPAs for allowing us to do this with SBDC. I think it's great that we can bring this type of education to small businesses. As I work with them on a regular basis, I hear that so many issues that they struggle with, so many concerns they have, so many things they don't know about, that we can only kind of fill that gap by educating them and providing this type of resources. So very happy to be here, and looking forward to a great session. We are talking about bookkeeping best practices today, and this is an area where there is so much to do. There is a lot that you can do in bookkeeping and with the goal really of making sure that you have financial data, financial statements, documentation that supports your financial data, handy, accurate, complete. And it helps you, when you do that, it helps you not only know where your business is, not only see where you underperform, at the business underperformed or outperformed, but also to be ready to get funding, to apply for grants, to apply for loans, to apply for someone to buy equity into your firm. And Andrew was talking about all the resources they have and they provide access to. And a lot of times these resources will depend on how good your business can present the financials, the financial performance, how it can show that the company is doing. So hopefully some of what we're going to cover today is going to help you improve how you are tracking your finances, or if you're not doing this today, it will give you the starting point to actually start working on that. We heard about me a little bit from Andrew, but my firm, FiBrick, provides accounting, tax, and fractional CFO services to small and mid-sized firms. We work with a lot of companies in technology or technology-enabled firms, e-commerce. We love working with them, but also professional service firms. And in that, we include architects, interior designers, wellness coaches, anyone who is providing a service for consulting for a fee, a contract fee, or hourly rates. Good clients for us. And I also published a book this past year. So yes, Andrew was saying how much I do in a day. I look back and I don't know when I did all this, but I published a book, Simple Choices, Big Rewards in Money, and it's about personal finances. My stories of all the people, my advice on how to manage money better and make more of it and keep more of it. And I focus on the personal finances because a lot of the habits that we develop as individuals managing our money, we bring to the business. So it's important to get good with our money, to be good at managing our money at the personal level so we can help our businesses that way. All right, so today I will cover a lot of things related to bookkeeping, and these are all very important. There is a lot more that we can get into details in different sections, but today I want to remind you of the importance of separating your personal from your business banking transactions, selecting the financial tools, the tech tools that you want to use to track your finances for the business, knowing where all your bank activities, your cash activity is coming from. I mean, this sounds like very easy and common sense, but trust me that sometimes we lose track of where our money is or where we're spending it. Define processes and timelines for your bookkeeping practices, and what are critical finance functions within the business to really help manage the financial performance. How to review your financial statements, and I will show you how to prepare them at a high level if you're not already doing that, how you can do that in Excel if you want to start that way, or how to do that in using a tool like QuickBooks. Some of the concepts might be maybe too basic for some of you, but because we have a large audience, we wasn't sure, how advanced I should go. So some of it will be basic, but I'll also show you a little more advanced, like reading your financial statements and focusing on a few KPIs, key performance indicators, if you want to really use the financials to help you accelerate growth. Okay, so the first thing is, let's make sure we are separating personal from business banking. And if you are already mixing the two, I'll give you some ideas of how you can separate them and how to, moving forward, how you can move money between the two types of accounts, personal and business, without commingling everything. I do get this question all the time, but I need to take money from my business to pay for my rent, or I need to sometimes use my personal account to lend money to my business. That's all good. And I'll tell you how you can do that without mixing everything and giving your tax accountant or the person that's going to prepare your financials a bunch of transactions that don't mean anything to them unless you actually sit with them and tell them this is personal, this is business. So the first step is to open a separate business account, an account for your business. If you have a business established with the state, you are incorporated or you formed an LLC, definitely open a bank account under the business name. You go to the bank with the incorporation documents and they help you with that account. If you're not a formal LLC or corporation and you're having, you have your business under your name, I still recommend that you open one bank account for business transactions. Under your own name, let's say you are a babysitter or what's another good example? You're a babysitter or you're a freelance writer. You do this under your name. You open a bank account where you're going to deposit all the cash receipts from your customers, and you're going to pay all the expenses for your business from that account. At the end of the year, it's going to be so much easier to put together, or during the year, put together your summary of business income and business expenses if you have a separate bank account. Whereas if you have all of this in your personal account, you have to go through and figure out if that Uber ride was for business or was personal. Or if that cash receipt that you got from your sister as a gift, we have sisters that are very generous, right? Mine send me money, I send them money, I think. So if you have this little gift from your sister as a cash receipt, it's in your bank, and then you have to figure out what is that business or is that personal. And imagine if you're audited by the IRS or another tax agency, and you have to show your bank transactions. You're going to have everything mixed in there, and then they're going to question whether a gift was really a gift and not taxable income. So I'm giving you all a few scenarios for you can see how complex it can get. So if you already had this happening in 2022, and if we're in the middle of the year and this is happening, we can switch. We can switch to, okay, from the remaining of the year, I'm going to separate the bank activity. And then for the past, let me go back and figure out what is what and summarize it so that I can give this to my tax accountant, the person that's going to do my financials, or for me to prepare them, and then keep that summary of what was business in your personal accounts and what was personal. Keep that in your files, properly classified, so in case you need that information at some point, you can pull that. What if now, I'm on step 3 now, you have 2 separate bank accounts, personal and business, which is the ideal, but your personal depends a lot on the business and vice versa. So what I recommend is that if you need to take money out of the business to pay for your personal expenses, you do a bank transfer from the business to the personal for a round amount, $3,000, $5,000, $2,000, and it's a bank transfer, it's a distribution to you as the owner, and then you pay from your personal account your personal expenses. If you need to pay the business some money or lend the business money, you do the same from your personal account, you transfer a round amount to the business, and you, in your categorization of your expenses, which I'll show you later, in your categorization of your bank activity, you mark that as a loan or a repayment of a loan to your business, or if it's the other way around, as a distribution. And that way, when you summarize your activity for the business, you know exactly what is revenue, what is expense, and what was a distribution to you. I'll pause. Any questions on this slide?
Yeah, it was just, I think you answered it mostly, but a quick clarification. I recently reimbursed business expenses I incurred using my personal credit card. Is it okay to reimburse those business expenses from my business account via an ACH transfer versus using a physical check for record keeping? And they do have a record of the business expenses in a reimbursement form.
Yes, exactly. That's perfect. That's what you need. You would do. You keep the support for that reimbursement, so it doesn't look like it was a distribution to you. It was actually an expense of the business, and you keep that as support. And then yes, you can do ACH transfers. You can do Zelle. You can do a check. The important thing is that when you are categorizing that transaction, you say that was the reimbursement, and you have the support for that. So when you can talk about it so much, but when you are keeping track of your support for everything, make sure you're labeling everything correctly by date with a little explanation, and then have a folder for this. So I have everything organized by year, month. Within the month, I have, let's say it was a receipt from my marketing person, my ABC, marketing, January, $1,000. So that way I can trace that back to my bank statement if I need to pull that for an audit. Any other questions?
Yeah, just clarifying, is it the same moving from personal to business, and it doesn't matter how many times you do it?
It doesn't matter how many, and it is the same. As long, what you want to avoid is misclassifying anything into revenue or expense when it's not. We don't want payments to you from the business, distribution to the owner, are not an expense of the business. They are a distribution. The business expenses is everything else that is not you, unless you are on salary, on payroll, then the payroll will be an expense. And then you pay taxes on the payroll. In this case, you're paying taxes on the net income of the business before your distribution. So that's why it's important to categorize things as distributions or loans or contributions in the financials. All right, I will move on. If we have more questions on this, maybe we can address them if we have more time, but I want to make sure we cover everything today.
Absolutely.
Great. So if you're, I'm kind of using, this is like the finance tech stack for your business. It might sound, if you're starting out, it might sound like, wow, I don't, this is all advanced, but it's not. There are so many tools out there that you can use to create processes that are standard for your business. Even if you're just one person just starting out, it's important that you know that you pick tools that are going to make your life easier, that are going to keep you organized. It could be an application to track your receipts. It could be box.com to save your files. Whatever it is, design what you want your processes to be, to keep organized, to track expenses and income, and decide on something that is easy for you to use if you're the one that's going to be using this software applications indefinitely, right? So the first item here is when you're doing your own bookkeeping versus outsourcing it, the files, not the files, but the application that you select might be different. If you're doing it yourself, the DIY, you might want to pick applications that are very user-friendly, may not have a lot of functionality, are low cost, and then you stick with that for as long as it gives you the information that you need. If you're thinking of outsourcing, even if it's in a year, you will want to, and outsourcing your bookkeeping or whatever function you have in your business that you may outsource. Marketing is one of them, right? Like we start doing marketing on MailChimp, but maybe the marketing experts don't use that, right? So if you're thinking of outsourcing, you want to find out what are the applications that most bookkeepers or most marketing experts use, and maybe you start out there because you know that eventually you want to delegate that. What software is best for your business? It's going, that's number two. That's going to depend on what is it that you want to get from them. If you want a software that allows you to send out invoices to your customers and allow the customers to make payments through right by clicking on the invoice, you will look for an application that provides that type of solution. If you just want to track time and expenses, then there is something else for that. Some of our therapists, customers, they use an application that is very specific to that industry because it allows them to invoice maybe the insurance companies or be able to schedule with their patients, and it solves for that, but it doesn't allow them to track expenses. It doesn't allow them to bring their costs into the business. Now they don't have a lot of expenses, so they don't have a lot of overhead. Right? So they don't have to have a system that will track every invoice that they receive from vendors and that needs a credit card attached to them. So decide what you need to manage your business and then pick the software based on that. For bookkeeping, item number 3, very popular applications are QuickBooks, which can be pricey depending on the version. Xero can also be a little pricey. Way is actually free and it's pretty good, and it works better if you're doing the bookkeeping yourself. Just to give you an idea of what using one of these applications for bookkeeping would do, you would be able to connect your bank accounts to them. The transactions will come in every day. You can classify them into different categories right there from the tool into revenue, marketing, insurance, and then the system generates, after you post all of these transactions or classify them, the system will generate your profit and loss or your income statement and your balance sheet. Profit and loss will show you revenue minus all the expenses based on the categories that you have chosen, and it shows you net income. So these reports are ready for you to use to provide for a loan application or for you to just see how the business is doing once you have categorized everything. When you have payroll, I really like Gusto, but you also have QuickBooks Payroll, you have ADP, there is JustWorks, TriNet. Gusto is I think that the most popular right now in the startup community and small businesses, so it's a pretty good one. And then for bill payment, this is important when you have a lot of contractors that you're paying on a regular basis. This can come in handy, like how do I pay my contractors? I get this question all the time. Venmo is not a solution. I don't love PayPal. If you can start with that. If you could do all your payments with Zelle, I actually like Zelle, which is part of your banking or of your bank, because it tracks the Pace name and you have the history for a long time. With Venmo, you lose the history after a certain amount of months. With PayPal, the reporting is not great. There are just a few disadvantages in some of those tools, but of course they upgrade every day, so do your research. Any questions here?
We got a couple that we're going to save till the end about paying yourself, if that works. And let me see if there's any specific to this one. Yeah, let's save them for the Q&A.
Great. All right, so I want to cover a little bit. I want to cover this a bit because we had an instance where clients that was new to us, we did their tax return, and after we had prepared the tax return, they came back to us and said, we found out that we had $20,000 in a PayPal account that we didn't know about. And it was shocking. You know, it was good that they had $20,000 in the bank account that they all of a sudden came in, but it was not good that we had to amend the return and pay, and they had to pay taxes on that because it was income. And it also recently came up when one of our clients who started selling on Shopify, they have, Shopify allows you to collect through PayPal, but also through Shopify. And Shopify is very popular for e-commerce businesses. Shopify is fulfilling the sale, but they're only responsible for the cash that they're collecting, and they're going to send you that. Whatever you collect through PayPal, it's not Shopify's responsibility. PayPal has to send you that. So if you set up a PayPal account to link it to Shopify and you forgot that you did that, and you're not looking at your PayPal account on a regular basis, or you didn't set up PayPal to transfer automatically the cash that's coming in, money is going to be accumulating in that PayPal account, and you're not going to realize it unless you really are on top of the list of accounts that you own, the list of merchant accounts that you have open. Everything has to be tracked. You need to have a list of all your accounts with your logins, whatever you need to do to have your inventory of where everything is for your business. Because I have seen these things happen to people that are busy, they're busy launching, they connect accounts, you can open a Venmo account and you have money going there, and you're not realizing that you're behind on keeping track of these things. So it's important to have a list of all the accounts that you use. We do this internally for our clients, just for our own purposes. We have like a client profile, and we say accounts the client has, how many checking, how many savings, how many credit cards, the bank, PayPal, Shopify, all of that. We track all of that for our bookkeeping purposes. They are responsible for keeping it for other reasons, to move the money around, but we keep track of those so that we can reconcile them. So these are some of the examples that are important for you to really know where they are, and whenever possible, consolidate. So if there is no reason to use Square and Stripe, or to use PayPal, Stripe, and Shopify. With Shopify, maybe there is just one that you want to use as a merchant account. Any questions?
Can you remind us again what that free or almost free software was, bookkeeping software?
Yes, so it's WAVE, but the website is waveapp.com. Wave, APP.com.
Gotcha. Thank you.
Okay. Now, you might be very small, or you may have a team of 20. It can be anywhere between those two ends. Regardless of where you are, it is important that you define what the finance functions are for your firm. And if it's just you, you're responsible for everything. But if it's not just you, you will assign responsibility to others that may take ownership of some of these functions. And this could be an outsourced accountant, tax, bookkeeper, CFO. There is a lot of confusion in that space when you outsource. I'll tell you from my own experience as a CPA and a financial fractional CFO for our clients. Sometimes we are the tax accountant and they have a bookkeeper, and year end comes and they're like, who is doing my 1099? And everyone is like, it's not me, it's not me, it's me. Or we are the tax accountant that for us, the basic tax accountant definition when they come to us is income taxes, right? And then all of a sudden they get a notice about their payroll, that the payroll tax rate wasn't right, and they're using a payroll company, right? And it gets very muddy, like to at that point when an issue comes up, like who does what. So it's very important that you understand who owns, that you first know what are all the functions that I need to be tracking for my business. It's billing, and I'll give you some examples, but like even the 1099s, who's going to do that for me? If there is an issue with my W-2s that I'm issuing my client, my staff, if I need to fix that, who is responsible for that? Collections, bank reconciliations. It's important to define what those are and then assign an owner to everything. Deadlines, again, important that we know what they are and making sure that we have the processes to comply with that. And this is not just tax deadlines, which are many. You have, depending on what type of business structure you have and what products or services you're selling, you may have to handle sales taxes and payroll taxes. And then you have now the pass-through entity tax in some states that if you're an S corp partnership or single member LLC, can be a great benefit for the owner. There is someone that needs to make that election. There is someone who needs to make the payments. So it's so critical that you know like what all the compliance deadlines that you might have, the ones that you want to miss because you are going to miss out on something. Very important to have. That's about processes and procedures in the company. Doesn't matter how small you are, whatever foundation you create on day one can define the success of your company. And then consistency in processes is critical too. If you 1 week you send your invoices on Friday and the next month you send them on 2 weeks later, like let's say your invoices should be going on the 1st and the next month you send them on the 10th and then the following month is like the 20th, it just creates bad habits within the company, but also it sets the wrong expectations on your clients. Like they don't take your deadline seriously because you don't send their invoices on a regular basis on the same date, and so they don't have an urgency to pay you because it's like, oh yeah, sometimes they send it on the 20th and sometimes they don't send them at all. So consistency can also have a big impact on the performance of your business. Any questions here?
Yeah, you mentioned consolidating when possible. This person's just curious when it's a good idea to diversify.
Oh, I was referring to consolidating bank accounts or merchant accounts. If the question is related to that, like for example, we send all of our invoices through QuickBooks Online, and we only send invoices that way, so everything is in there. We collect payments through QuickBooks Online. We don't take checks. We don't accept payments via Venmo or PayPal. They can either click through QuickBooks Online and pay there, or if they have a Bill.com account, Bill.com allows their users, like our clients, to set us up as a vendor, and they can send us payment that way. It comes to us as an ACH in the same form. That's what I meant. Instead of saying to my clients, oh yes, you can pay me via Venmo, you can pay me via, send me a check. It just makes things so much more complex. That's what I was referring to. But if the question is about diversification in a different form, please clarify and we can come back to that.
Sounds good, thank you.
Any other questions?
There was a question, and you just answered it a little bit, about why you would use an ACH transfer instead of a check. And it sounds like some people won't accept the check. Is that correct?
Well, I'm glad they asked that because an ACH a lot of times comes with a fee depending on the merchant that you use. So QuickBooks does charge 1% on ACH collections. If you get a check, you don't pay anything. But what are the benefits of doing ACH? You get your money faster. There is less chasing around if you just make that easy for the client. So click here, enter your bank account, pay me, versus they have to get a checkbook and write a check and mail it, and maybe it gets lost, and by the time you get it, you already lost 3 weeks. So it's about cash flow management, turning around your sales as quickly as possible. And your time, your time. Like, I don't want to waste time having to go to the bank and deposit a check, or even trying to figure out the app where I'm going to do that. So I'm willing to pay the 1%. But it is okay to do the checks. It's just knowing that you might run into some issues with delivery and timing. Great.
Thank you.
So these are some of the critical finance functions, sales and onboarding of your clients. It's important that we have that process optimized and really, really consistent, because this is going to be the biggest factor in your revenue growth, right? So some of the things that I see happening with businesses a lot of times in the service spaces is that the sales cycle is not well defined and is not pristine. And you get a situation where you met with a potential client and then you're supposed to send them a quote and you didn't put this down anywhere and you forget because life gets really busy. And then the client, the potential client, gets disappointed and they go with the next person. Or they give you the benefit of the doubt and they say, oh, I'm waiting for that quote. And you have to then say, sorry, this happened, I'll send it to you in 2 days. And maybe you don't do it in 2 days. So anyways, it creates a lot of, it might make the firm and you look like you are not organized and on top of your things. So I suggest that you have your sales and client onboarding process define what happens. I meet with the clients, I send my engagement letters or my proposals 2 days later, but they also have a tool to track this. It could be in Excel, but there are also other CRM tools, CRM, customer relationship management tools that are free, where you keep track of your leads and you have notes and you have reminders. And it doesn't allow you, those tools don't allow you to neglect your clients. Imagine neglecting your clients from day one. It's not good. So, and then once the client is your client, they say, yes, I'm going to work with you. What happens after? Like, what do you do? What do you send them? How soon do you do it? Who is going to do the work? All that has to be very, very well defined and have a consistent process. Billings and collections is another big one. We have a very good process here. I onboard my clients. I do this myself. I onboard my clients on the tax tool or bookkeeping tool. Assign them to one of my tax accountants or bookkeepers, and then we get to the billing. I set up all our billing to be recurring because we try to be on a monthly retainer. I set up the first bill, make it recurring for the next few months. And every month when I'm sending my new invoices, I review who has not paid and I send a reminder right away. So that's billing and collections. You decide like how are you going to bill at the beginning of the month, every month. That's what we do. Even if we have a new client come in, it's going to be right at as soon as we start, we bill. And then the collections is once a month or once a week, whatever it is, but consistent. And then the clients just get used to the fact that you are going to follow up if they don't pay, so they might pay more time. Reconciliations of cash. Oh, before I go there, between 1 and 2, it's very important that you have a good agreement with your clients, written agreements where you have your terms and conditions for payment, so that when they get that follow-up from you, it doesn't come as a surprise to them. So when we invoice at the beginning of the month, invoices are due within 5 days, 10 days, a month, whatever your terms you want to set up. I always suggest due on receipt at the beginning of the month if it's a service, but sometimes depending on the industry that might not work. For number 3, reconciliation of cash and credit card accounts. If you are doing this manually, you don't have QuickBooks, Wave, or anything like that, you're doing this like if it was your personal account. You want to make sure that you know where the money is going, that there isn't a charge from Uber that wasn't you, trust me, that happens, that something that you didn't expect was going to be debited from your bank wasn't debited. Like I forgot that I had a recurring payment with that I set up my donation to World Vision as a recurring donation. I was like, when did I do that? And at year end, I saw this charge on my personal account. I was like, oh, I don't think I meant to do that every year, but okay, maybe the universe is telling me to donate a little more. But that's why you look at your bank accounts, and you do the same thing with the business. And then if you're summarizing if you're using Excel and you're summarizing your transactions for the month into revenue and the different type of expenses, then you do that at the end of each month and make sure everything looks legit. And if you're doing this in an application, in a bookkeeping application, you're just going to go to your banking tab, categorize everything for the month, review what doesn't look right, and take action if you need to do something, cancel a subscription, or call the vendor to see why that charge was made. And you take care of that at least once a month, at the beginning of the month for the prior month. And number 4 is about preparing your profit and loss, which is also called income statement, which includes your revenue and all your expenses for the business, preparing that at least on a monthly basis, and a balance sheet. If you are doing this manually in Excel, the balance sheet is a little tricky. It might not be something that you will be able to do, because the balance sheet shows cumulative balances for assets, which include your cash and your receivables, and cumulative balances for what you owe, credit cards and loans, and then your equity. And if you learn how to do that manually, it's easy to maintain. But if you're not familiar with the concepts, and it might be a little tricky, but the P&L, the profit and loss, is the main report that you're going to need for if you're starting out and you don't have a lot of balances on the balance sheet. That might be sufficient. If you're using Excel, and because you don't have something that's tracking your receivables, what your clients owe you, you will need to keep that somewhere. It's important that you know who owes you, that you have a log of who owes you the payment for invoices, and that's going to be like a separate tracking sheet that you maintain. If you're using an accounting tool and you're using the tool to send your invoices out, as you reconcile your bank account and match cash receipts to your invoices, whatever invoice doesn't have a payment will show up in your AR report, accounts receivable agent report, and you can see at any point in time who owes you money. I will pause for questions.
Absolutely. And I will say, Ramona, there are a ton of questions, and we're going to try to get to them all today. But if we do miss any, we will follow up with you on those. At what point would you go from having a simple spreadsheet to a software like QuickBooks?
Yeah, so I'll suggest doing that when when the volume of transactions is growing to the point where it's hard to track them manually. If you're sending out 30 invoices a month and you have a credit card transaction and a checking account, and all those together have 50 to 100 transactions a month, it might be better to move to a tool. It also comes down to affordability too. So these applications will cost you, if you're doing it on your own, if you get it through an accountant, you probably get a discount. QuickBooks gives a discount to our clients. It will cost between $35 and $60 a month. And sometimes that might be a little high for some business owners. Say, I prefer to pay and have peace of mind. But I'll say the volume, if things can get messy by doing them manually, then that's a good sign.
Thank you. And then we did get some questions around best practices for showing records of transactions, for instance, loans from business, payment to self as business owner. Did you want to save that one till the end, or did you want to talk about that one now?
To keep like support for those things? Is that where?
Best practices and how to actually show the transactions.
Oh, yeah. So the ones that are P&L related, we just go to a P&L account, profit and loss account category. On the balance sheet, if it's a loan, that will go on the loan account on the balance sheet. So that's why the balance sheet is, if you have those types of transactions already for your business, it might be better that you are on an accounting tool, because it will help you track those non-P&L items on the balance sheet, like a loan, a payment of a loan. Those will hit the balance sheet, and those are better tracked in an accounting tool. But if you're doing this in Excel, a log might be enough. So like if you're preparing your P&L, everything that's not P&L, you put separately in some other tracking sheet that says these are my loans and my payments against the loans, until you move to an accounting tool. Great. So
Thank you.
if you have more, we can see if we have time. But let me show, I want to show them how to do some of this in Excel at a very high level. So if you are using Excel, if you're using Excel, it probably has something already. But if you don't have something and you want to start using Excel, this is an example of like a download. This will be a download from the bank. Yours is going to look different. You know, I have it simplified here, but the bank will say like amount can be on the right. This is out of order maybe, but you should have at least bank amount, a description from the bank, which is not going to look like this. So let's say this is amount. Oh, let me see why it does not showing. Yeah, let's say this is amount, and let's say this is bank description. Bank description and the date. So the bank is probably going to give you something like this. It's not going to be, the bank description in some cases is going to be very, very generic. It's not going to say income tax. It might say New York State tax. It might say IRS. And this is not as clean in the bank as we have it here. But let's say it gives you the date, the amount, and then a bank description. This category is what you do manually. So you download this from your bank, from your banking portal, which all banks give you this. You go to transactions, download, you select the dates, or you do search, select the dates, and then download. They show a little bit differently, but they all give you the download of your bank activity in Excel or CSV. You download them, and this is only if you're doing this, even if you're doing it monthly, downloading them is easier because then you can categorize them, and instead of typing them manually in a spreadsheet, it's better that you do it this way if you can. So then you're gonna create you're gonna add your profit and loss category. Is it a meal? Is it an office expense? Contractor? If it is a contractor, you add the name and another column, the name of the contractor. If it's advertising, you put advertising. The goal with this is then to summarize, to group the items that are the same, all the meals, all the advertising into a total that then you're going to put in your profit and loss spreadsheet. This is just to help you pull together the pieces, and then you're going to go into your profit and loss spreadsheet and add just the totals there. Now there are ways to summarize this. If you know Excel, there is a pivot table that can be created, but if you don't, if you add a simple filter here, which you do under data and then filter, you can then filter for one at a time. So if I say advertising, it's going to give me all the advertising, and I can then sum this. If you select it, it gives you the summary here, 577. And then I just go in my profit and loss and I type 577 in the line that I dedicated to advertising. If you do it like this one at a time, it's not that bad if you only have 20 categories. But if you know all the advanced Excel techniques, you can still create a summary based on column C, and then from there copy it to the profit and loss. So like contractors, and then you have it here. So that's, that helps. Now the other file that I want to show you then is once you have the summary, this is how your profit and loss looks. So here you see that I have a line for sales. So if I had over there in that other spreadsheet, the total, all my sales, I would put them in here if it was January. If I had given a refund, I'll put it there. My cost of goods, this is like cost directly related to the sales. If you have a contractor that's selling for you, that will probably go here. And then I have advertising, salaries, and so on. And then by doing this, I have my profit and loss. This looks very simple. You can add more categories. You can insert a row and just right click and insert a row. And then you can, let's say you have something that I don't have here, you just insert a row and then you would have your, you have the ability to add a new account there. But you can do this every month, and then it looks so pretty neat. You can see how the business is growing or not growing, what areas are spending the most. And then if you have to submit this for an application for a loan or a grant, you can just submit this. But you have your support somewhere else, which is all that data that you downloaded from the bank. So that data, if you do it every month, the download from the bank, you just insert, you update every month, one at a time. If you're doing this at the end of the year for 2022, you might be okay just doing the full year. In that case, you would just have one column that has the full year 2022, and most applications ask for a full year. They don't need to see it by month. It's only in some cases that you're gonna need this by month. Any questions here?
Yeah, you actually, a question came in and this was good timing. They were looking for recommendations for the schedule for tracking financial records and activities in terms of what's done daily and what's done weekly and what's done monthly.
Oh, so in Excel, it would just be, you can create that yourself, or you can find a lot of templates online. But it's going to be, if I was doing this in Excel, I would just use something like this, and then I would have, this is the balance sheet, which can be created, but it's not that simple as I mentioned. But you can just add a tab here for your in customer invoices, for example, and then you track them here, and you can just add like customer name, amount, date of invoice, and payment status, right? And then if something is not paid, that means that you have, that's your receivables. You can add one for loan activities, and then you have the loan amount here. You know, let's say you got 10,000, or I don't know if that's 10 or 100, but 100, let's say, and then you have all your payments here. Payment one is, and then you put the date, right? So you can add as much, like payment, the date would be here, and then the amount will be here, and then you have a running total over here that will show you how much you owe on that loan. So you can use one big workbook and add all the tabs that you need to track a lot of information in there. You can have one with like personal expenses, not personal expenses, business expenses paid with personal card, personal funds, forgive my spelling. So you have here the list, the date of the transaction, the description, the amount, how was it paid. So if you have to track it to your credit card, you want to know that it was the Chase 123 or the Amex this. That way you can trace it back to that. That's how you do this in Excel. Just having everything in one place, tracking as much as you can is easier to then consolidate into financials if you need to.
That's great. You answered a ton of questions on how to show the actual transaction. For example, we talked about the loans and then transactions from PayPal. So you definitely answered quite a few of those for folks that asked that. And there are a few more questions. Did you have more slides, or did you want to jump into the Q&A?
Let me do the slide on the bookkeeping. So perfect. This is a test drive. I'm not going to cover a ton here, but I'm going to show you, this is something that's available to anyone in, this is a free, I'm trying to see where I go. Okay, here. I'm going to open this in an incognito window. This is a free company that QuickBooks gives us to test how QuickBooks would work if you were to use them. I'm not sure why this is not pasting, but let me see if I can do it here. No. Let me open it. Let me see if I can open it from here. I promise I tested this before I started.
What are the options when you right click over the link?
Yeah, this one is not the one I wanted to use because this is my the one that I get within my company. But let me see if I can try something else. Let me stop sharing for a second, if that's okay. And then I'll pull it from another section. But with QuickBooks, when I open this, I will tell you that with QuickBooks or an application like Wave, you would connect your bank account into the banking tab with QuickBooks or within QuickBooks or Wave, and then you would every day the bank will send the transactions that happened that day, and that took place in the bank account that day. And at the end of the week or at the end of the month, you can then go in and categorize them. And that's what I wanted to show you. And I think I got it. So I'll share in a little bit. Again. Okay. So can you see my screen?
Yep.
Okay, great. So this is a sample company and the link worked. I just clicked on it from my Teams chat that my staff has sent. So it was clickable there, but not on the presentation. So this, when I send it to you, you'll test it out and then let me know if it works before you share it with everyone else. But this is the banking tab and for QuickBooks, and this will show you that, let me move this. This will show you the bank accounts that have been connected to this banking tab. And if you want to link a new account, you will click here. So let's say you open a savings account, you will click here. And then every day, all the transactions come here. And there are some categories that the QuickBooks is suggesting. You select the one that you want to use. You find here, if advertising exists, it will come up. So let's say this is advertising. You select advertising, and then you add the transaction. So you just do this daily, once a week, at the end of the month, at the latest, the first week for the prior month. So the first week of the month for the prior month. As you categorize all of this, the system is generating your reports. So when you go to reports and I go to the profit and loss, anything that I have already categorized from the banking tab will show up in my profit and loss. There isn't a lot of data in January, but if I show you, let me just use all dates just to make sure. This is how your profit and loss will look. It's already there. The system created it for you. It's long because you have a lot of this sample has a lot of categories, but you keep it either simple or long if you want to stretch, have the categorization and show more like advertising online, advertising print. You can create new categories, but we suggest not having too many because it's hard to analyze. And then the other thing you do is that you can actually then select to show the data by month right here. And then you can see how the company has done on a monthly basis. So everything is automated. It's so easy. You can just give this to your accountant for tax purposes. You can use it to estimate payments, tax payments. You can use it definitely to run your business better. And yes, so there's a lot more into QuickBooks, but I wanted to, let's stop there and then have more questions. If you have questions, I'll answer them.
Absolutely. I'll turn it over to Jenny to start asking them. And if there's any, as I mentioned, that we don't get to, we will follow up because we do only have a few moments. Jenny?
I know, there was so much.
We are close to time here, so we will get some questions answered and follow up with those that we don't have time for. So,
Jenny, if I could jump in for a quick minute.
Yes.
Things I wanted to kind of race through. And Ramona, first off, thanks so much. It was a really engaging and really helpful presentation. A couple of quick things I wanted to highlight, for those of you who are here and maybe that's food for thought in terms of follow-up and additional, opportunities for you to kind of grow your business. I guess first off, Ramona had mentioned sort of in terms of formalizing your business. For those of you who don't have a business bank account, so important. And I think I wanted to kind of highlight that to make sure. And to reiterate the fact that here in New York State, and in particular here in New York City, there are a wide range of credit unions that are in place that are really well positioned to help work with small business owners. So you're not necessarily going to have to walk into kind of a multinational firm where you're bank where you may not, feel as comfortable. If you're doing modest amounts of sales or you're just first launching your business, credit unions are really, really a good option for you in terms of being able to get started. Second off, I think in terms of the finance functions, I thought Ramona did an amazing job sort of laying out kind of what you need to do in terms of, the folks we work with on a day in, day out basis, generating sales, coming up with new products and services. That's the fun part of running your business, right? But sort of making sure that you're kind of understanding about the billing components, about kind of handling accounts receivable, who's doing that, and how that's part of your overall functions are just so crucial. And I was really so happy, I guess, how Ramona really kind of nailed that down. So having a team as you're kind of in place, sort of being able to delegate tasks. You may not be the in-house bookkeeper, but knowing how your books work is just so crucial. So having these as skills and being able to kind of tackle it so you can kind of effectively delegate it is really, really important. I thought what you went through in terms of tracking expenses and income was just so well done. I think it's really kind of a helpful example for folks as you're being able to look at, how's your business doing, and be able to work with a business advisor on, what if you're categorizing certain expenses towards particular areas, how does that compare to industry standards? How does that compare to prior years? Being able to kind of get that assessment and understanding about how your business is operating is really, really important. And then kind of finally, I guess this is probably maybe a step 2 with Ramona for another day, but sort of thinking about these actuals and being able to kind of convert that into projections. I think Ramona sort of talked about kind of thinking about bank loans or investments. How do you effectively tell the financial story of your business, and being able to work with a business advisor in terms of pulling together, this important data, and being able to look going forward to sort of say, I need X number of dollars, and with that, I'm going to be able to project, business growth in the following areas. So using this data as a way to kind of springboard and grow your business going forward, I think is really, really crucial. So I just want to make sure kind of I highlighted a couple of things that kind of jumped out at me. And again, Ramona, thanks so much. It was great and very, very insightful.
Thank you. No, thank you, Andrew. It's great that you mentioned those things. There is so much we can talk about, and some of these sections, some of these topics can become their own sections. So, like even how to prepare the financial statements, that would be another hour, right? So I'm glad you brought up some of those things, because I think it's important that we know, like, what are all the benefits of doing this, and what are the potential needs for having good bookkeeping practices. Definitely. I think I have a few more minutes, and I see that a lot of people have stayed on. So there was a slide that I didn't get to, but just very, very quickly, once you have your financial statements, you can see how the company is growing, what your growth margin is, what expenses have a very uneven trend, or not a steady trend, and cash flow needs, receivables that you have outstanding, your revenue by customer. You can track so much, and you focus on some of this initially for a few months, and then move on to others. You don't have to analyze all of this and try to grow each one of these at the first, every time. You focus on improving your cash flow, improving your collections, your revenue by customer, like who are your best customers? How many recurring customers do I have? I want to turn more into recurring. So that's what the data is used for, is to help you set up a plan and then make corrections to things that might not be working. So that was my last slide there. And then I have all my contact information here. Please connect with me. I am very active on social media, respond to all my messages. And we have a lot of resources on our website, free courses, paid courses, important deadlines. There is even a QuickBooks online course that I prepared myself, and it's on sale. It's available for sale on the website. And it's the simplified QuickBooks guide, I believe that's the name. So please go check what we have and reach out, give me feedback, and I'd love to hear from you and see what you're doing. So connect with me so I can follow you and see what you're up to. Thank you so much, everyone at SBDC. Andrew, always a pleasure working with you.
Yes, so Ramona, do you have a few more minutes for us to ask questions, or do you need to go?
No, let's do a few.
Okay.
Yes, let's do a few more.
All right, we'll do a few here, and then So if you are able to stay, we will try and get some questions answered. If you need to go, we will have a recording that you can watch this portion later. All right, so first question, will it be possible to have templates of the spreadsheets in Excel that you were covering during your presentation?
I can send the P&L one. I will send the bank data because that will come from them, but I can send the P&L spreadsheet, yes.
Wonderful, thank you. We can include that in our follow-up email. I know Andrew mentioned credit unions. Do you have any other recommendations for best financial institutions for self-employed people, particularly ones that don't charge a monthly fee and offer you the ability to keep the, let's see, the lowest maximum to keep in your account is what the questioner wanted to know.
Yes, there are a few banks that are focusing on building a relationship with the small business community, and the banks that in the past weren't even doing that. So always find out from your own bank and the banks in your area if they have a small business team. But I know Cedeno, which was acquired, or the other way around by HSBC, they are really, really good with the small business owners. I use Chase, it's a big bank, but I have been with them forever. I like their user, their website and the connection with QuickBooks. A lot of our business owners use Bank of America and Capital One. And then there are local banks that are really like the credit unions. Like I live in Putnam County, there is a credit union right here. Of course, it's amazing, but sometimes the tech part is also important, the online use.
Right. So there's a question about how to rectify payments when you have done something incorrectly. So for instance, you made a work purchase accidentally from a personal account or sold an item through your personal Venmo.
I would just suggest to send it right back to the business if it belongs to the business, and have a note in the bank. And when you're doing the transfer, you can add a note that says what this is for. Like I had a client who sent me a Zelle to my personal account, and she used my cell phone number and she sent me money, and I'm collecting from her, like, your invoice is outstanding. She said, I sent it. I was like, oh no, I went to my personal account. So I immediately transferred the money into my business and did it that way. So that's the best way.
Excellent. So with those bank transactions that you were adding to the banking spreadsheet, this person wanted to know a little bit more about how you do that. Is that specific to each bank, or is there some standard process that you can describe here?
Oh, so you download, the data is downloaded from the bank based on whatever format they have, but all of them will have the data that I showed: description, date, and amount. They might have other fields like reference number, but the ones that you need is description, date, and amount. And then in terms of the categories that you use, it's just business expense categories that are known to you. Marketing and insurance. You can even search up online what are the most popular or most used business expense categories, and you'll find a bunch. And then when you categorize everything, that's a summary that you'll use to enter that data into your P&L, profit and loss, which is a spreadsheet I'm going to share.
Excellent. And yeah, so is that a spreadsheet that you created yourself then?
Yes, and I'll put in a separate tab, I will put a list of expense categories that we share with our clients during tax season. And that will be, yes.
Thank you. This person would like to know, they have a home office, so are they able to pay rent and utilities from a business bank account then?
No, so everything related to your home has to be paid from your personal account. At the end of the year, there is a computation of the home office deduction that's done by your tax accountant, or then maybe you do yourself if you're doing your own taxes. But it's that home office expense deduction is just a calculation to include in your personal tax return. It's not to get reimbursement from the business or anything like that.
Okay. Just a little more clarification about paying yourself from a business account. This person wanted to know, I know you touched on this some, but we want to make sure to clarify for this person, should it be classified as a distribution as opposed to a salary or a withdrawal?
Paying herself from, if it's an LLC, or partnership, is a distribution. If the company, if the person has an S corp, they should be on payroll, and then they get a salary, but they can also get distributions from the S corp, which will be categorized as distribution.
Excellent.
And I want to clarify something about what I said about the home office deduction. If your business is an S corp or a C corp, you can get reimbursed from the business or by the business for the home office deduction card that you calculated. That's how it should be done for an S corp or a C corp. If you're an LLC or a partnership or a sole proprietorship, you just show the home office expense in your personal tax return, and that will reduce your taxable income.
Okay.
Yes.
So if you're using QuickBooks, this person would like to know, is there a version that is better fit for an educational business?
So the QuickBooks has one tier that's called, I think, Starters, and the next one is Essentials. We like Essentials because it lets you have 3 users. It allows you to do a few things that the first one doesn't, but you can always upgrade. So I'll start with the most basic one and see if it allows you to do the things that you want to get out of it. And if it doesn't, you can upgrade immediately. I will have to get a better understanding of what, the billing structure, if you want to track time, there's just a lot of things that go into that.
Okay, so we will, oh yeah, go ahead.
The other thing is that if you go to QuickBooks Online and you go to plans and pricing, it gives you a comparison of what's included in each of them, and you can make a decision from there. Go ahead.
Okay, so we'll make this the last question, and everything else we'll follow up with afterward. For attendees interested in FiBrick services, how would they follow up?
On my website, FiBrick.com, which is the first one here on the screen, we have a consultation request form. You fill that out, and we will get back to you within 1 to 2 days with my calendar to schedule the meeting. Thank you for asking.
Wonderful. And thank you for being so generous with your time today. Thank you to all of our attendees for joining us. Remember that you will receive a follow-up email a few hours after today's webinar with a recording link. We're also going to get you presentation slides and some other links that we talked about today in the presentation. We kindly ask that you take a few minutes to give us feedback in the webinar survey that displays after the webinar and is linked in that follow-up email. Also, if you have questions related to this webinar, you can reply to that follow-up email to contact the Pace SBDC, and they have shared contact information in the chat today as well. And I hope you all have a wonderful rest of your day. Any last comments from Ramona or Andrew?
Thank you so much to everyone who joined and stayed, and the questions. I love the questions, and let us know what else you want to learn about. We'll be considering input for future educational programming. I'm sure SBDC will do the same, but I also run my own events. I'd like to hear, so send me a note.
Yeah, and thank you all very much. Really appreciate it. Again, Ramona, great session, and Jenny and Renee, thank you very much, and my colleague Greg Callender behind the scenes as well. Really appreciate you all taking the time, and in addition to what Ramona has available, so I just want to again encourage and remind you all that the NYSBDC business advisors located throughout New York State are available here for your service and support. All of our services are offered at no cost, and look forward to continuing to work with you and help you grow your business. So thanks.
Fantastic. Have a lovely day, everyone, and look for those follow-up emails. Bye-bye.